Very good morning. Good morning, everyone. Audio, video, all good? Let me know. Very good morning. Very good morning. Audio, video, clear? Good morning. Can you please let me know whether the audio and video is clear to you all? I think there's a problem. Is it visible clearly? The text? All clear? Okay. रिपोर्ट समरी पेड कोर्स में कौन से फोल्डर में है? I'll let you know. Okay, I'll let you know. So welcome back again in the RBI Annual Report series. So we have completed the initial portion, or say 23-24 analysis or the review part of it. So we have completed it. In yesterday's class we have discussed till G20 Indian presidency. So till here we have completed the report in depth. Now what is there, as you can see in the thumbnail, it is part 2. So basically I want to tell you that in part 2 of the report there is unnecessary repetition of what we have done in the part 1 only. Getting my point? So I will not repeat all those things which we have done so as to save your time. It is only just repeatedly in detail analysis and a theory kind of thing is written over there. So unnecessary repetition content would not be taught so as to save your time and efforts, right? So that's why I have made it part 2. So now onwards from here, prospects for 24-25 we will be dealing from here as part 2 of the report. So it is more of generalized now. All the basic concepts, conceptual thing which we have covered were there in part 1 or the initial series of the report, the technical terms which were there. Now it is generally, from here we will see it is prospect, what they are expecting for 24-25. What has happened in 23-24 we have discussed. Understood? Okay, so we will complete the entire report, you need not worry about that, but the things which are repeated will not be taken to save your time, energy and efforts. Okay, yeah. So now let's begin with prospects for 24-25. Prospects for 24-25. Just give me a second. So here you see what the report is expecting on every parameter at the international level and at the domestic level for the aggregates to perform, right? So that would be covered now. So here you can see, first when we are talking about the prospects of 24-25 financial year, let us first talk about the global economy. Okay, global economy. Now the global economic outlook remains affected by multiple headwinds. So what is the outlook of the report regarding global economy? What does the report expects the global economy to be moving towards, right? So first thing the report says that the global economic outlook remains affected by multiple headwinds. Global economy will get affected in 24-25 due to several factors, several headwinds. What are these factors? Some of them we have already discussed. So that's why I told you, now it will be your revision kind of thing. There are many things which will be repeated. Okay. So first thing, inflation persisting above target. We have already discussed that 23-24 also witnessed at the global level that inflation was above the desirable limits globally. 24-25 expectations are on the same line, that at the global level inflation will persist above the desirable targets. Okay, above the desirable targets, the pace of disinflation losing momentum. Inflation persisting higher, pace of disinflation losing momentum. Now you already know what disinflation is, right? Disinflation is what? Disinflation is reduced rate of inflation. Inflation is there, but at a lower rate. So this is what disinflation is. Disinflation is losing momentum, remember. So in 24-25, it is expected that at the global level, you will see disinflation losing momentum and inflation rising. Understood? Next, elevated public debt. Okay. It is hanging. So let me open it again. Elevated public debt in major systematic economies and their repercussions on the global economy in the case of disorderly adjustment. First thing we have seen about inflation. Second thing is that public debt. Public debt is what? Debt on the government of the country, right? The entire public debt, whatever the government owns or say owes, basically, not owns, owes. Whatever the government owes to say international organizations, banks or market, whatever the public debt is there. So public debt is expected to be elevated at the global level. It means at the global level, governments are borrowing more. It is not only the case with India, right? So this is the thing. It is not only the case with India. Now, major systemic economies, the public debt will be higher. Now, if public debt will be higher, the repercussions will be faced all over the world. As you can see, there are repercussions on the global economy in case of disorderly adjustment. Now, what happens is when your public debt rises, your fiscal deficit rises, right? Fiscal deficit rises, so majority of your funds go into repaying the borrowings. So investment for the private entities, investment pool or the money available from the market for private entities gets reduced, investment activities get affected. This is what we have discussed as crowding out effect in our previous classes, right? So it affects your investment activities, economic activities, that in turn will affect your economic growth, and your economic growth will affect your trade relations with other countries, isn't it? You understand this, right? How higher fiscal deficit leads to crowding out. So I told you that when there is higher, yes, very good, crowding out effect is there. So what happens is government borrows more from the market due to higher public debt to pay back that debt, right? So when government borrows more from the market, less fund is available because money supply is same, right? So less fund is available for the private borrowers who want to invest it. So money, rather being used for investment, is going to some unproductive uses for repaying of the public debt. That is not a good sign. It will affect your economic activity. That in turn will affect your trade relations from other countries. This is how it is expected that every country will face the repercussions of this rising public debt. Have you understood? Yes? Okay? All right. Now, so we have seen inflation, we have seen how elevated public debt will affect us. Next, financial stability risk. Financial stability risk. Financial stability risk from higher for longer interest rate scenario. Okay. Now, there is financial stability risk at the global level. You might be hearing this news is now, all over the platforms that in 2025 there will be a severe market crash as more severe than the 2008 financial crisis, if you have read about it, right? So investors, economists are speculating the stock market will crash more severely than the 2008-9 financial crisis, right? So the global scenario is that we are moving towards financial instability, okay? Financial stability risks are there, okay? Why? There are higher interest rates, investors pulling out their money from some countries, investing in some other, right? All this volatility is there. Given all other factors, financial markets are expected not to be stable, okay? This is the thing. Next, protracted geopolitical tensions. Also, you already know, we have discussed all these points. You already know that there are geopolitical tensions going on. Russia-Ukraine war, then there is severe, conditions in Middle East, right? So all these things, they affect the resources being diverted towards unproductive uses. So these countries involved in geopolitical tensions, using their resources for unproductive uses, their economy will affect, and if one economy gets affected, other economies have the repercussions that cannot be abated, right? Because we are all interlinked. So this is the thing. Inefficiencies from geoeconomic fragmentation and accentuated climate shocks. Also, given geopolitical tensions, there is another threat which is looming all over the world is your climate shock, climate change. We have already discussed that climate change poses a threat to economic activity, economic well-being. There are sectors which get affected due to climate change, like agricultural production. That in turn affects your productivity of the industrial sector as well. That in turn affects your inflation level. So it translates into a bigger macroeconomic problem, isn't it? So this is the global scenario projected for 24-25 global economies, some certain points according to the report. Now, as per World Economic Outlook report, who releases it? Tell me quickly. Who publishes the World Economic Outlook report? Which organization publishes the World Economic Outlook report? Anyone? IMF, very good. IMF, right? International Monetary Fund. World Economic Forum? No. IMF publishes the World Economic Outlook report, okay? So, World Economic Outlook report for April 2024 says global economy is projected to grow by 3.2% each in 24 as well as in 25, same pace as in the preceding year. So, the growth rate is not going to change substantially. This is what you need to understand. So, according to World Economic Outlook report, the growth rate is this same 3.2. The world economy is expected to grow by 3.2% in 24 as well as in 25. So, the pace of growth is not going to change substantially. So far, it is projected, right? Now, remember always it is projected. It is not what is the actual data. That actual data can differ, of course, right? Next, growth in AEs, advanced economies. Growth in advanced economies at 1.7% in 2024 is projected to be marginally higher than that of 1.6. So, it is expected that the advanced economies will face, higher growth, not substantially higher, just marginally higher from 1.6 to 1.7, but at least it is higher. That is a good indicator, so that the global trade volume also does not contract hugely, right? If advanced economies are performing well, developing economies will have good trade relations with them, right? So this is the thing. Next, emerging market and developing economies are projected to expand at 4.2%, but it is below 4.3, which is last year. So there is some concern regarding the development trajectory of your emerging market and developing economies. We have seen that advanced economies are projected to be projected to have higher growth rate as compared to the previous year, but the emerging market economies and the developing economies have some concern. Their growth is 4.2, which is less than 4.3 of the preceding year, okay? So here is some concern. This might be due to, volatility in the markets, the global volume of trade being suffered right now, higher inflationary levels, so they need to keep interest rates higher. You know that emerging market economies and developing economies are having interest rates as higher, right, as possible, because they want to contain the inflation. Now, when interest rates are higher, it absorbs liquidity from your market. To grow, you need liquidity, you need funds. So that is somewhat affecting growth as well. That could be one of the reasons that the growth projections are less for these economies. Because already you are a developing economy, you need more funds to develop, right? You need more capital to develop as compared to the advanced or developed economies. So that's how one such reason can be attributed to this. Understood, right? So these are your general growth projections for 2024-25 for the global economy as a whole. Now let's move ahead with inflation projections. What does the report says regarding expected inflationary trend in 24-25? What is the expected inflationary trend? So if we talk about inflation projections, global inflation is to moderate from 6.8% to 5.9% in 24 and 4.5% in 25. This is something important. While doing the review analysis, assessment part of 23-24 financial year, we have discussed that at the global level, inflation is much higher, right? That's why, all the major economies, advanced economies have kept their key policy rates higher, interest rates higher. We have seen this. Now, given this scenario, now it is expected that they will cut down their rates. Why we are expecting that? Because we are expecting a moderation in the inflation levels at the global level. So it will moderate from 5.9% in 2024 to say 4.5% in 25. So you can expect cutting down of the interest rates, right? You can expect it gradually, because when inflation eases, then you can reduce your interest rates, because now it comes closer to your desirable limits, whatever the desirable limit your economy suits to your economy. Understood, right? So remember this trend. In 25, inflation is expected to get moderated as compared to 24. Okay. Next, challenges in achieving the last mile of disinflation due to recurrent supply shocks from adverse climate events, geopolitical hostilities. So basically, why are we not able to achieve, given sustained momentum of higher interest rates, why still aren't we able to achieve disinflationary trend? Why still inflation is growing with a higher rate? Why we are not witnessing at the global level a low rate of inflation? Reasons given here are recurrent supply shocks. As we have discussed, due to climate change and climate shock, there are supply chain disruptions. What is the term I told you when the inflation comes from supply side? Which is the term I have told you in the classes, right? When the inflation comes from the supply side, what is that term? Very good. Bottleneck inflation. So supply chain disruptions are there due to climate shocks. Supply chain disruption, supply side inflation still remaining higher. Bottleneck inflation. Okay, so this is the thing. Then geopolitical hostilities. Again, geopolitical tensions are also going on. How does it affect inflation? See, if Russia, Ukraine are indulged in war, what do you expect from the government of their countries? Will they be channelizing their money, their resources in production of some productive uses or production of weapons and warheads? Weapons and warheads, obviously. So the resources get wasted, isn't it? Supply of some production gets affected, supply chain gets affected. There are countries importing, crude oil and all these things from Russia, from Ukraine. Ukraine once known as the wheat bowl of the world, if you know, wheat bowl. Okay, so it affects the supply, good amount of supply, proper availability of supply of inputs or final goods to other countries as well. That leads to inflation in those countries as well. So it is not that Russia and Ukraine only are suffering, every other country is suffering which has trade relations with them. Isn't it? This is how it affects. Next. So this was regarding your inflation projection. Remember, we are expecting lesser inflation in 25 as compared to 24. You can ask doubts at the end of the class. Okay. Monetary policy. Now, monetary policy stands. What is the monetary policy decision which the report is expecting to be there all over the world? Let's see. First, restrictive monetary policies and lower international commodity prices aiding inflation reduction. So still, although we are expecting that inflation will moderate in 25, but 25 is yet to come, right? 25 is yet to come. Given the ongoing 2024, it is expected at the global level there will be restrictive monetary policies, tightening of the liquidity. The central banks all over the world are still projected or expected to keep the interest rates higher so as to achieve their target, their inflation target. Okay, lower international commodity prices. So international commodity prices are expected to be lower, aiding to inflation reduction. So this is what report expects regarding inflation and monetary policy decision, right? It is expected that in 25 inflation will get moderated, so the commodity prices at the international level, whichever commodity are being traded, they will also witness a moderating trend in their prices. Along with that, still the central banks are expected to keep liquidity tightened, to absorb liquidity from the economies. Both the combinations will further aid into reduction of inflation by all the major economies in the world, right? Next, central banks in major advanced economies indicate gradual rate cuts beginning in 24. Why? That's what I told you. Since we are expecting the inflation to get moderated, it is expected maybe by end of 24. Right now you have higher interest rates, right? But some of the banks or central banks of the advanced economies are expected to indicate a rate cut. They might start cutting the interest rates because now the projection of inflation is, it is to be moderating in 25, by 25, okay, when 25 onsets. This is the thing, understood, right? Next, recent upward inflation surprise causing market volatility and repricing expectations and generating significant volatility in key financial market segments, okay, currency, bonds, equities. So this point is saying that the recent upward inflation surprises, we are witnessing upward inflation all over the world. Due to upward inflation, there is volatility which has been observed in all your markets, be it your financial market as well, okay. So inflation's impact have been observed in your currency, bond market, equity market, right? So impacts are there resulting into volatility into your bond market, equity market, falling purchasing power of your currency. How does inflation affects currency? The real wage gets affected, not the nominal one, right? So there are two concepts here, nominal wage and the real wage. Suppose you are earning some good amount like 70,000 rupees per month, okay? So if you are earning 70,000 rupees per month, that is not what actual real income is. You will have to spend out of that income. Given the price level in the economy, how much are you able to spend out of it? What is your purchasing power of that income is your real wage. Yes. What is the purchasing power of that income is, suppose if you are earning 70,000 or say after paying taxes and all, your disposable income remains to be 70,000, which you can use, okay. So it remains 70,000, but that income can only buy goods and services worth rupees 50,000. So actually your real wage is 50,000. 20,000 rupees loss due to inflation, due to higher prices. Understood? So this is the thing. That's why it is affecting every segment like this. Next, elevated financial market volatility. Volatility is there, as you know, and swings in the capital flows add to macroeconomic and financial stability challenges. Now you can relate this point to the lesser growth projection forecasted for emerging market and developing economies. As we have seen that they are expected to grow at a lower rate as compared to 24 and 25. Isn't it? Why? Because we have discussed inflation is there. I have already told you that due to rising inflation there are tightening of monetary policies all over the world. Central banks have kept interest rates higher. Interest rates higher, capital outflows. There are emerging market economies, they are facing the capital outflow problem. What is the capital outflow? You all know very well that, if say US Central Bank, Fed Reserve increases the interest rate, investors will pull out their money from say Indian market. If the rates here are lower, they will try and invest there. So whichever market is offering you the highest interest rate, you will want to invest there only. Yes or no, right? So this is the thing. This is what is happening. That's why it is affecting the growth forecast for emerging market and developing economies. Okay. Now, the text is clearly visible to you. Text, are you able to see the text clearly? Whatever is written here. Yes? Okay then, good. Now, so we have discussed the monetary policy projections as well. You should keep all these trends in mind. Emerging market economies facing volatility because of decisions of advanced economies like higher interest rate, capital outflows, all these things, right? Now moving ahead with global trade. What is the growth projection for global trade volume? Okay. Where will it head in 24-25? So global trade volume is expected to recover with growth of 3.0% in 24 and 3.3% in 25 from 0.3% in 23 with easing inflation and expected rebound in goods trade. Now try to understand this. We have seen that Indian merchandise exports are also suffering. In one of the report classes, I have discussed with you, Indian merchandise exports are suffering, right? They are not as satisfactory as they should be. Why? Due to fall in global trade volume. One of the reasons is that the global trade volume also was lower, right, in 23-24. But now what is good about this trend is it is expected to rise in future by end of 24 or by mid 24 and by the onset of 2025. So it is expected to increase. Now when global trade volume increases, every country engaged in trading activity gets benefited, isn't it? There will be demand for your products as well. There will be demand for your products, your services, right? So you can export more, you can earn more, you can capitalize upon that opportunity. Now why is it expected to grow? Why we are expecting global trade volume to grow further as compared to the previous levels? Easing inflation. When there is inflation in one economy, it gets translated into other, remember. So inflation in US does not remains inflation only in US. It might enter into India as well. Why am I saying that? Try to understand. If there is inflation say in India, okay, there is higher inflation in India, what do you expect? The products will be goods and services which will be produced, they will be having higher prices. Yes or no, right? The inputs will be priced higher. If some country is there importing those inputs from India, will have to pay much. So in this way, it will affect that country as well. Inflation will be exported to that country along with the goods and services. This is the best line which I can think of right now. Along with the goods and services, if you have inflation, that also gets exported to other country because you have exported them at higher prices. Getting this, right? So this is how it works. So if inflation eases at the global level, everyone would benefit. Global trade volume will increase. So this is the thing. Global trade volume is expected to rise. Next, high levels of public debt in major advanced economies and emerging market economies and their explosive trajectories are raising concerns around sustainability of public finance in these economies and run the risk of adding to the already heightened financial market volatility. Again the same point. Rising public debt, also all these inflation, higher inflation projections. All these factors combined together in advanced economies, emerging market economies. So debt is already higher, you are growing very fast, so you have inflation as well. All this is leading to instability in financial markets, okay, which are already volatile due to these uncertainties about inflation, about interest rates. Why are they volatile? You don't know whether the central bank of a country is going to cut down the rates in future or increase it. There is increased uncertainty about this. So that uncertainty translates into uncertainty in the decision making of the investors as well. So there is uncertainty everywhere. Investors will not be able to decide where to invest. They will be waiting for these decisions, monetary policy decisions. That's why they translate into volatility in financial markets. Are you able to understand this, right? This is the thing. Now, another point written here is elevated public debt levels in systemic economies can lead to spikes in risk premia and sovereign bond yields in these markets, which can then spill over to other financial markets. So these debts can affect. Now see, if you are attentive, you will be able to compare two things here. In the part 1, if you see for 23-24, we have discussed that GSEC yields moderating. They are moderating in India. Yes or no, right? When do yields moderate? When current prices of the bonds are higher, because they have inverse relationship. You know already that. You are aware of this, right? So I have explained you that there is inverse relationship in the bond yield and the current price of the bond in the bond market. So we have seen that GSEC yields are moderating in India. That means prices are rising. Why prices are rising? They have confidence in the bond market. We have confidence in the bond market. The confidence is creating upward pressure in the prices given other factors. Government has good resources. RBI recently transferred enough surplus, more than enough surplus to the government of India. Government buying back the securities, okay? So injecting liquidity in the market. All these phenomena are showing a rise in confidence. That's why you were observing moderating government security yields or bond yields. First thing in 23-24. Now what is expected, not talking about India, but similar kind of economies, also the emerging market economies and advanced economies, due to higher public debt. Now what happens is, if public debt is higher, that means there is a question mark on the fiscal policy management or consolidation of the government, isn't it? Agree or not? So if there is a question mark, there will be a question mark on the credibility of the bond market as well. That would gradually translate into lesser confidence in the securities, isn't it? Lesser confidence, prices will fall, and when prices falls, current prices will fall, you know that yield will increase, inverse relationship. Bond yield will increase. Understood or not? That's why written here that elevated public debt levels can lead to increasing yields, but that is not a good sign. It is showing that your bond market has some glitches now. It will enter into a phase of lesser investor confidence. Have you understood this point? Okay, that's how we have connected the public debt point, elevated public debt, with financial market volatility. Elevated public debt with financial market volatility. I hope you have understood this. Understood or not? Yes or no? Let me know, please. See, we cannot say less volatility leads to more yield, but less prices will lead to more yield. Okay, there is this relationship which I can establish. Volatility is something which you cannot give an equation. Less volatility, this will happen. This much volatility, this. No, it does not form into an equation, right? That needs to be assessed when there is volatility. Understood, right? Okay, so now the resulting decrease in capital flows could hamper the already subdued global growth. So if financial market is more volatile, if you don't have enough capital flows in your economy, that would again affect the global growth, right? So you can see this from both point of views. First, instability in the financial market, so capital from that point of view, as well as the foreign capital coming in your emerging market economies. So if emerging market economies are projected to be developing at a lower growth rate, you can expect the investor confidence falling down to invest in those markets. Why will they risk their money into those markets? They will try to invest their money somewhere else. So they might witness lack of capital inflow. That capital inflow will again add to their brunt, their severity, isn't it? That would affect their growth. Next, need for fiscal consolidation. Now, because public debts are higher at the global level, what we can say is we need fiscal consolidation. Not only India needs fiscal consolidation, all over the world the fiscal consolidation is needed. What is fiscal consolidation? Fiscal consolidation is your prudent fiscal policy which tries to reduce the fiscal deficit, increase revenue receipts, and rationalize your expenditure to more productive uses, to more those kind of expenditures which are in capital nature. They are generating capital, capex, capital expenditure kind of thing, right? So it is expected that all over the world fiscal consolidation should be improved. Affected countries need credible fiscal consolidation plans. Yes, reducing the gap between expenditure and receipts in favor of receipts, right? In favor of receipts. Receipts should increase. That's how you will be able to reduce fiscal deficit. Very good. Then, it is essential to ensure stable global macroeconomic and financial environment. Stable macroeconomic and financial environment. So we need to have some stability. Otherwise, so much of volatility. Financial markets are there, they are generally volatile, but at least your economy should be stable. Otherwise, it will add to the brunt, it will add to the severity, isn't it? So we need fiscal consolidation, we need certain predictability regarding inflation targeting so that we can attract foreign investments as well. Getting my point? This is the thing. Now, medium to long term challenges. There are these general challenges posed in front of the entire world, which are now termed by report as medium to long term challenges. These are certain challenges common to every economy or every country. We cannot disagree with that, right? We need to work upon them, like climate change, cyber security, cryptocurrency, fintech, central bank digital currencies. Yesterday only we have discussed everything about this, right? RBI has launched a pilot project regarding e-rupee, e-retail and e-wholesale, if you remember, all these things. Tech disruptions via AI machine learning. So you already know, if you have heard that statement, I think given by Elon Musk, he only said that AI is far more dangerous than what we can think, right? So AI, artificial intelligence and machine learning are also disrupting the employment generation, production lines, assembly lines in the economies. Although it will add to your production, but it is also causing disruptions, right? So this is also a huge concern. We need to have everything in limit. Remember, I would say one thing here, just adding some extra thing for your understanding. If you see technology, science and technology is like the third eye of Lord Shiva. You would agree with me, I hope so. It is like the third eye. What is the third eye of Lord Shiva? If it is closed, okay, no harm to you. But if it gets opened, it can cause destruction. So if you reach that limit, when the third eye opens up, technology, rather than adding to your to your benefit to the humankind, serving the humankind, can rather destroy the humankind, right? Also creation, yes, creation plus destruction. So you have to decide that limit. You cannot replace humans with technology. You have to aid them with technology. That's what we should decide. Where do we need to stop? Do you agree with me or not? Technical advancement is good, but not up to that level where it is destroying your stability, your peace, your humankind, your mankind. Right? So this is what we need to have. And there are debates going on all over the world regarding AI and all these things, how harmful it can be. So this is a global challenge. Then coordinated global policy efforts required to address these challenges. Also, the report says, yes, also the report says there is a coordination required among all these policies, you know. It is not that if one economy tries to improve upon all these challenges, the global scenario will improve. No, climate change is not something specific to India, specific to US or China. It is a global concern, so everyone has to participate actively, right? Yes, very good. So, you know, there should be a balance between everything, right? आज आप लोगों को मेरी आवाज़ ज़्यादा चुभ तो नहीं रही है क्योंकि थोड़ा सा गला बैठा हुआ है. आई थिंक इट इज़ हैवी टुडे. आई डोंट नो आप लोगों को कैसा, इरिटेशन तो नहीं हो रहा है. आई होप सो. ओके. Then, so we have discussed the global economy. Now moving on. All right, that's cool. So moving on to domestic economy outlook. Domestic economy outlook, if we talk about for 24-25. So we have seen domestic economy performance in 23-24. Now what we expect for our own economy in 24-25. Okay. Now the outlook for Indian economy remains bright. So first thing you should be happy about this, that we have a bright future. Okay, then underpinned by sustained strengthening of macroeconomic fundamentals. Given all these global scenario, you or we are expecting Indian economy to be strong. That is a good sign. Our macroeconomic fundamentals will perform better than the others, or even than ours only, given the previous trend, right? So like GDP, inflation, employment, investment, all these macroeconomic fundamentals, aggregates, they will be performing better for India. Okay. Next, robust financial and corporate sectors. You know, financial market of India, exuberant, resilient. Sometimes there are volatilities, but it is performing good. Corporate market, corporates are earning more profits, as we have discussed in the previous classes, right? More corporate profit. Bank profits are there, NBFCs are able to generate profits. So it is already adding to the economic growth, right? Next, resilient external sector. Our services sectors are performing well. Services exports are performing well. We are having good trade balance, okay? But still we have negative trade balance. But it does not translate into, you know, negative trade performance. We are improving upon our trade balance. If you remember in the previous classes, we have discussed current account deficit in India is moderating. That is only the what we don't need any other fact to say that India is performing good on trade front. Yes. Okay. I think the PDF is there in the Telegram group. Yes or no? Or might be in the paid course group. Okay. I will let you know. I'll confirm from the team. And I'll ask them where exactly they have uploaded the PDF, then I'll let you know, okay? Okay, so it is in paid course, right? Yes, comparatively less fiscal deficit, good dividend, less crowding effect, all these combinations. Now, the government's continued thrust on capex. Remember, in the initial analysis only we have discussed, government is continuously increasing its capital expenditure, right? That is boosting the economy because capital expenditure creates assets. right? That is one of the important factors while pursuing fiscal consolidation at the same time. So if you see rising debt on the global level, you see Indian government consolidating its fiscal policy. So we are performing far better than the others, right? This is very difficult to have these two things simultaneously. What are these? Having fiscal consolidation at one point of time, as well as having higher capital expenditure at the same time. So that means government is getting revenue, tax revenue also adding to the government coffers, GST, continuously increasing the tax revenue collections for the government, right? All these combined factors are leading to India's future projections being bright for 24-25 as well. Consumer and business optimism. Economy is expected to grow fast. Businesses have optimism. They have confidence in Indian economy, are high. Well for investment and consumption demand, which is good for investment and consumption demand as well. If you invest in India, okay, you will create production, people will have employment opportunities, they will have income, they will demand more. When they demand more, both for consumption goods and investment goods, that will again create more production activity, then again employment, then again more income, then again demand. So demand is the driver of economic growth. That's what I can say, right? This is how it will happen. Now, if we talk about the agricultural and rural activity prospects for India, what is the report expecting for the Indian agriculture sector to perform in 24-25? So first thing it says, ebbing El Nino. Ebbing means diminishing, reducing. El Nino, an expected above normal southwest monsoon. So this is good. In 23 and initial 24, El Nino was strong. What is El Nino? El Nino is a geographical phenomena, if you know. There are two phenomena related, actually three: El Nino, La Nina and Enso. These are related to your warming and cooling of the equatorial Pacific Ocean waters, right? So this is a geographical concept, but what simply, if we try to understand, not going into a much depth, El Nino is basically when your Pacific Ocean waters, oceanic waters around the equator. So the equatorial Pacific waters, as we say, they warm up. So it is the warming of that water, that phenomena is your El Nino. Now why are we concerned about that? Because this event, warming up of those water, leads to chain of geographical and climatic phenomena which affects the rainfall situation in countries like India. Geography, of course, I have been, in UPSC for long. I have also taught almost for 3 years to UPSC students. That's why you have to have knowledge of everything if you are appearing for UPSC, right? So this is the thing. And so remember, El Nino, what was I saying? El Nino is the warming of those equatorial Pacific waters, right? Now when it is warming, it translates into drought-like situation sometimes, lesser rainfall in countries like India. So that affects the monsoon situation of these countries. But if we have ebbing El Nino, the effect are diminishing. So that means our monsoon is safe. It will not get severely affected. Although we will have above normal southwest monsoon, it is expected. Okay, it is expected in 24-25 we will have above normal southwest monsoon. Clear? That is good sign for Indian agriculture. So our irrigation does not get affected. Next, positive outlook for agriculture and rural activity. Since given all these climate situation, positive forecast for rainfall as well, agricultural productivity will be good. Next, extension of Pradhan Mantri Garib Kalyan Anna Yojana. So there is a scheme, Pradhan Mantri Garib Kalyan Yojana. It is a broader scheme. It covers a lot of different things. But here we are talking about Anna Yojana, particularly the Anna section of it, right? Related to food grains, yes, where they provide financial assistance, subsidized rates of food grains, all these things to the lesser income groups of the society, right? So this is your Pradhan Mantri Garib Kalyan Anna Yojana scheme. So providing financial assistance, food grains assistance to the lower strata of the society, low income strata, this scheme has now been extended for a period of 5 more years with effect from January 1, 24. So now it is being extended for more 5 years. So you can imagine it will improve India's food security scenario. Okay, it will add to national food security efforts. What is food security? Food security, that food should be available to everyone at affordable prices as well as with good quality. Security is not having no hunger. Remember, if whenever you read about food security, it is not about zero hunger only. It is about zero hunger plus nutrition. Availability of food as well as quality of food. That is food security. Okay, so it will add these schemes, extension of these schemes will add to food security and good agricultural performance on part of rural India or the downtrodden sections or strata of Indian society, right? So this is the thing. Then we have some other initiatives as well, the government initiatives like, Atmanirbhar, oil seeds abhiyan. Remember, where is the government focusing are your most important areas. We want import substitution strategy for oil seeds. Currently we have a huge import bill due to, vegetable oil seeds and all these imports. Now we want to domestically produce them. So government has launched Atmanirbhar Oil Seeds Abhiyan, which focuses on increasing self-sufficiency in oil seeds. Right? Then expansion of environmentally sustainable nano-diammonium phosphate, nano DAP in all agroclimatic zones. This is a fertilizer, right? Fertilizers very important for agriculture, but they have their pros and cons if you have read about them. So in fertilizer being used for agriculture, the government is continuously, trying R&D, research and development, trying to introduce innovations so as to increase the nutrient absorption from these fertilizers and reduce the leaching problem which is there, right? Reduce the leaching problem. So what is this nano-diammonium phosphate? Nano-diammonium phosphate or nano-DAP. Diammonium phosphate is basically your fertilizer which has the important macronutrients like nitrogen and phosphorus, right? So it has nitrogen and phosphorus. That's why much rich in nutrients, macronutrients, which are required for crop fertility. Then it is nano. So it is basically using nanotechnology. Now, how is it different from the earlier DAP, earlier diammonium phosphate? When it is using nanotechnology, the size of the particulate matter is very less. It is that much lesser than the pores of the leaves or the crops which are there. So if it is lesser than their pores, they can absorb it quickly, more efficiently. So there is no leaching out of these nutrients with water. You know what is leaching? When the essential nutrients get, washed away with water. They don't get absorbed by the crop, by the soil. This is leaching. So it will reduce all these problems related to fertilizers, right? So this is a good initiative, nano-diammonium phosphate. Okay, new biomanufacturing, biofoundry. I will take up from here in the next class, since at 11 there is another class scheduled on the YouTube which is going to be live. So this class might end at 11. I am waiting for any questions if you have, any doubts if you have. So we have discussed till nano DAP. Okay, nano DAP. I have explained you what nano DAP is, how is it more efficient than the earlier one, right? So I hope you have understood all these things today. We will continue the analysis. We will cover everything which is important, same time filtering out whatever is unnecessary repetition. Okay, so any relevant questions from today's class? I am waiting for your questions. One of the UPSC coaching interviewer was saying corruption is grease of economy. Is this right? See, what I can say on corruption and inequality is, these are two things which can never be eradicated. We can reduce corruption, We can reduce inequality, but saying eradicating them, whether it is Greece or not, that is someone's point of view. Okay, you are seeing corruption as something adding to the economy or as a harm to the economy, can be your opinion, but actually it is harmful. We all know that. Also, we cannot eliminate these things from society. This is the fact. We can just try to reduce them so as to serve the mankind. Okay, this is all what I can say on this. Right? Any further questions? So keep on revising these, trends. Have a hold over these trends which is going on. It will help you in the exam, and the concepts which we have discussed in part 1. Soon we will be able to complete this report very soon. Okay. All right then. Since there are no questions, I will wind up here, and next I will resume. Is there any question? Further question? We will resume from here. Biomanufacturing and biofoundry scheme. Okay, I will resume from here. Biofoundry. Any question? One more question? पिछली बार नाबार्ड आईटी से मेंस लिखा था, बट बहुत कम मार्जिन से मेंस रह गया. टाइम ज़्यादा होने की वजह से इस बार मैं आरबीआई देने का सोचा कि जुलाई तक ख़त्म हो जाए. आरबीआई का प्री मेंस नहीं होता अब. अकॉर्डिंग टू स्पेकुलेशन, नाबार्ड और आरबीआई लगभग कोइंसाइड कर रहे हैं. आई एम अनएम्प्लॉयड इन 25 ईयर्स. क्या करना चाहिए? सी, I would say I can suggest you regarding this in the next class. Okay, because there is another class scheduled at 11 a.m. so our discussion might get ended abruptly, so I don't want that. Can you please repeat this question in the next class, okay, well before time, so that I know I need to discuss it with you. All right, so I will discuss it with you in the next class, maybe. Yeah, not maybe, sure. If you just remind me your doubt, okay, just remind me that you need to ask this even if I forget. Okay, so I'll take up this in next class. That is it for today's session. Thank you so much for being focused and interactive. Have a very good day. I'll see you later. Thank you.